Subscribe to our channel and click on the bell button to receive important financial updates faster than anybody else. Friends, welcome to another video on your channel Profit Equities. In this video, we'll be talking about 7 stocks which have the highest upside potential over the next 1 year due to their R&D focus. Now, rising competition, changing consumer preferences and technological advancements make it imperative for companies to invest in research and development. Such investments lead to cost efficiencies, business process optimization, and improved productivity. R&D assists in the development of new products and enables a company to survive in a competitive market. Firms with innovative and differentiated products with lower costs tend to attain market leadership and are in a position to create entry barriers in the industry. Today we talk about 7 such stocks. Please watch this video to know more. Now, the first stock on the list is Granules India Limited, which is available at Rs 94.10 and the face value for it is 1. The symbol for it is GRANULES. The company manufactures active pharmaceutical ingredients, pharmaceutical formulations, intermediates and drugs. It is also into contract research and manufacturing services. The company's EBITDA margin has been hurt in the first quarter of 2018-19 due to the increase in raw material costs. However, the management's guidance aims at a healthy growth in 2018-19 due to the likelihood of a price hike, ramp-up of new launches in the US, steps taken to resolve supply constraints, and the likelihood of improved profits from joint ventures. The stock has corrected more than 15% in the past year and is expected to rise more than 20% over the next 1 year. Looking at the 1-year chart, it's evident that the company corrected substantially during the first few months of the year, then had a V-shaped recovery, but of late it has again corrected. Now, the company is a borderline stock between a mid-cap and a small cap with a market capitalization of 2,391.76 crores. The EPS of 5.63 translates into a price to earnings ratio of 16.71, which is much cheaper when compared with the industry PE of 30.47. The book value of 50.29 also translates into a reasonable price to book ratio of 1.87. The dividend yield here is 1.06%, whereas the promoter holding is a bit below average at 44.88%. Now, the second stock on the list is Atul Auto Limited, which is available at Rs 322.80 and the face value for it is 5. The symbol for it is ATULAUTO. Manufacturer of auto rickshaws, pickup vans and passenger vehicle chassis, Atul Auto is present across 21 states, according to a report by Asit C. Mehta Investment Intermediates. Improvement in rural demands, new licenses, launch of alternative fuel 3-wheelers across India by 2018-19, improved export volumes and expansion of dealers' networks are the key triggers for the company's growth. Now, the stock price has corrected over 25% in the past 1 year, and this stock has an upside potential of over 30% over the same period. Now, as is evident from the 1-year chart, the company was consolidating for the majority of the year, but of late it has literally fallen off the cliff. The market cap of the company is 708.33 crores, which means that the company is a small cap one. The EPS of 22.18 translates into a price to earnings ratio of 14.55, which is much cheaper when compared with the industry PE of 19.10. The book value of 99.98 also translates into a reasonable price to book ratio of 3.23. The debt to equity here is 0.0480, whereas the return on equity for this stock is a decent number at 0.2175. The dividend yield is 1.63, whereas the promoter holding is just about average at 52.70%. Now, the third stock on the list is R&D Industries Limited, which is available at Rs 1252.45 and the face value for it is 5. The symbol for it is AARTIND. Now, R&D Industries Limited is a specialty chemicals and pharma company. This company manufactures dyes, pigments, pharmaceuticals and agro and rubber chemicals. Ambit Capital is bullish on the stock as the recent weakness in the rupee and Chinese production disruptions are likely to benefit the company due to import substitution, which is a multi-billion-dollar opportunity from 700 domestic and 300 export clients. The stock has delivered 50% returns in the last 1 year and could rise an additional 15 to 20% over the next 1 year. Looking at the 1-year chart, the company has been on a beautiful uptrend and a lot of wealth has been created here. The market cap of the company is 10,182.42 crores, which means that the company is a mid-cap one. The EPS of 42.15 translates into a price to earnings ratio of 29.71, which is slightly more expensive when compared with the industry PE of 24.80. The book value of 186.37 also translates into an expensive price to book ratio of 6.72. The dividend yield here is 0.08%, whereas the promoter holding is just about average at 51.07%. Now the next stock on the list is Eicher Motors Limited, which is available at Rs 21,978.10 and the face value for it is 10. The symbol for it is EICHER Manufacturer of auto products, Eicher Motors owns the iconic Royal Enfield motorcycle business. Antique Stockbroking expects the company to be the new operating profit leader in the domestic two-wheeler industry by 2021-22. Royal Enfield will be the biggest beneficiary of the growing trend of leisure driving. Eicher is better placed to withstand cost pressures related to BS6-led tech changes. The stock has corrected nearly 12% in the past 1 year and has an upside potential of well over 10% in the next 1 year. Now looking at the 1 year chart, the company is closing the year at almost the same level at which it started it. The market cap of the company is 59,926.15 crores, which indicates that the company is a large cap one. The EPS of 663.75 translates into a price to earnings ratio of 33.11, which is slightly more expensive when compared with the industry PE of 29.57. The price to book ratio of 11.15 is also very expensive. The dividend yield percent here is 0.50, whereas the promoter holding for this company is just about average at 50.47%. The fourth stock on the list is IFB Industries Limited, which is available at Rs 971.70 and the face value for it is 10. The symbol for it is IFB. Now the company manufactures home appliances and fine blanking components. The recent agreement with Ramsons to acquire its industrial laundry equipment business will benefit IFB. According to a report by First Call Research, rising disposable incomes, easy access to credit, increasing rural electrification and wide use of online sales will be significant growth drivers for the company and the industry. The company has a market capitalization of 3,937.21 crores, which means that the company is a mid-cap one. The EPS of 22.22 translates into a price to earnings ratio of 43.73, which is much more expensive when compared with the industry PE of 38.22. The book value of 135.62 translates into a price to book ratio of 7.16, which is also on the higher side. The company does not pay out any dividends, and the promoter holding is a strong factor for this company and stands at a figure of 74.96%. Now the next stock on the list is PI Industries Limited, which is available at Rs 771.05 and the face value for it is 1. The symbol for it is PIIND. PI Industries is an agrochemicals company manufacturing insecticides, fungicides, herbicides, specialty products, plant nutrients, plant protection and hybrid seeds. Chola Securities is positive on the long-term fundamentals of the company given its link with global innovators, strong product pipeline, comfortable order book position and capacity addition in the custom synthesis manufacturing business. The stock has literally been flat throughout the entire year and not much wealth has been created here. It offers an upside potential of close to 15 to 20% over the next 1 year. As is evident from the 1 year chart, the company went on an uptrend for the first few months of the year, but post that it has been on a significant decline. The company has a market cap of 10,633.34 crores, which indicates that it's a mid-cap stock. The EPS of 25.24 translates into a price to earnings ratio of 30.55, which is cheaper than the industry PE of 37.05. The book value of 138.66, however, translates into an expensive price to book ratio of 5.56. The dividend yield here is 0.52%, whereas the promoter holding for this stock is just about average at 51.43%. The final stock on the list is SRF Limited, which is available at Rs 1,754.15 and the face value for it is 10. The symbol for it is SRF. Now the company is engaged in manufacturing chemicals and polymers, technical textiles and packaging films. Edelweiss Investment Research expects that the growth from dedicated plants and deferred orders in specialty chemical business will drive growth in 2018-19. In addition, a delayed agri-chemicals recovery with capacity expansion in refrigerants is likely to improve growth in 2019-20. The stock has delivered close to 20% growth in the past 1 year and could rise 10% over the next year. Now looking at the last 1 year chart, the stock appears choppy throughout the entire year. The company is a mid-cap with a market capitalization of 10,082.94 crores. The EPS of 74.47 translates into a price to earnings ratio of 23.56, which is largely in line with the industry PE of 25.14. The price to book ratio of 2.92 is also not wildly expensive. The company has a dividend yield of 0.68%, whereas the promoter holding for this stock stands at a figure of 52.32%. Now friends, please don't consider this to be a recommendation from our part. Please go ahead and do your own research. This and all other content that you see on our channel is intended to be a piece of news. Also friends, this is not our own research. We will be providing a link to the source for this video in the description section. Please go through the article to build more conviction around your investment decision. Thanks for watching, and if you have not yet subscribed to this channel, please consider doing so.